G'day folks, it's Jim here from FX Charts. Good morning, it's 3rd of September. Thought I'd do a quick video because there's been a fair bit of action overnight with the US dollar again underpinned by some decent data, good manufacturing data and construction numbers as well. So that's kept the dollar pretty strong. We'll go straight to the euro. The euro actually has been relatively steady, and the reaction to the data was somewhat muted. That's helped partly by a move higher in euro sterling, which underpinned the euro. Sterling had a steep sell-off, but as far as the euro is concerned, we're still within this channel. Probably likely to remain so, I think, until the ECB meeting tomorrow. Although we do get the services PMIs and the European retail sales numbers today, so that could provoke a bit of volatility. But overall, I think the euro looks to me as though it's pretty well underpinned here at 131. The 4 hourly charts are showing a bit of bullish divergence, so it wouldn't actually surprise me to see the euro squeeze a little bit higher. But I don't think we're going much above sort of 131, 65, 70 really. If we do, then we're probably going to make a bit of a run back to sort of high ground around 132 and possibly up to about this 132.60 level. I really don't see it. And I think we're probably in for some sideways trade there. So moving quickly along to dollar yen, which was really where the action was, took me by surprise. I didn't think the dollar was going to do too much yesterday. It was trading happily just below this top here, but Asia started to take a little bit higher, and stops got triggered once we got past this or 104.30 level. It's been up to 105.20 since really after the US data today, and although the 4 hour charts are now becoming a little bit overbought, and then the 1 hourlies are overbought and turning a little bit lower, I don't think we're going to go too high today. There's a lot of option expiries due later on and over the next couple of days at 105, so that could keep it fairly well pinned to around here. But if we go right out, we need to go up to the weeklies actually. Now, from this move down here, starting when in 2007, is it June 2007 at about 123, right all the way down to those. We're sitting right just below this these highs here. I'll just go back to the dailies to point out. So this high here, 105.43. Now we're yet to take that out, but if and when we do, it's also very important FIBO resistance here, 61.8% of this whole move down. If and when we do take that out, there's not really, as you can see, an awful lot to stop it. There's some highs here, it looks 107, 108, but this point up here, 110.65, going back to 2008, August 2008, will be important. And then above there's not an awful lot really to stop it going up to sort of this 112.5 level, which is the 76.4% FIBO resistance. Now that's going to take a while, but the weeklies are looking positive, and I think we are going to go higher, and so buying dips looks to be the name of the game. Now, as far as dips are concerned, there's and we could easily see a move back to this or 104.30, 40 level. Beware of the Russian-Ukraine situation, because if there's a flight back into the yen, we're going to get a nasty spike lower. But in the meantime, dollar yen's actually just making new highs now as I speak, so it's just going through 105.20. But if the Ukraine situation does blow up, we could see a spike back, and I think while I'm happy to be long up here, I really want to leave room to be able to buy dips, and I think we are going to see them. So what was 104 and a quarter, and below there this 38.2% FIBO level, about 103.80. That should provide some decent support. We're probably not going to sit back down there now for a while, but stay long and look to add to it on dips. Sterling, that had a tough time today. It did spike a little bit higher early on, got up to 166.14, but then a poll came out showing that the yes vote for independence in Scotland has picked up some very strong momentum. The no votes collapsed, and sterling went with it, and it's right down here now on its lows at 164.68. Now, as long as it remains within the channel, this bottom down here is about 164.20, 25, something like that. I think we can continue to use the channel, but if the yes vote does come about, sterling could head an awful lot lower very quickly, and the next FIBO support is not seen down here until about 160, 163. And I noticed someone the other day saying, I can't remember which economist it was, but saying that we could see a 10% falling cable. So that would take us way back down here. So that would be only if the yes vote came through, because it would cause all sorts of chaos. I can't actually believe they're going to vote yes, but it's looking as though it's going to be a very close call. So staying short of sterling is the way to be. I do think in the short term, the 4 hourlies have got some decent downside momentum, but the hourlies are very oversold at the moment. So a bit of a squeeze back up to sort of 165. Maybe sort of the bottom. This is the previous low of their trend at 165.35. I'd certainly be a seller up there, and I don't think we're going above the 100-200 hour moving averages. They're at 165 3/4. So in line with the long dollar theory, selling cable into rallies is still the name of the game. Same applies for dollar Swiss. It made a new high at 92.11 overnight. And it's just coming off, and the 4 hour charts look as though they may be turning a little bit low. And we've also got some mild bearish momentum here, having made new highs, but the MACDs and the RSIs were unable to carry on. So I think we might see a little bit of a dip. Not really looking for too much. If we saw it back down here towards this sort of 91, sort of 25-30 level, I'd be looking to buy it. The rising trend support, the major rising trend support, is not really seen until about 90-70, so I'd keep stops underneath there, and if possible keep them under sort of this 90-30 level. That's quite a long way away at the moment, but I think we might see it come a little bit lower, and as I say, down around 91.20 is where I'm looking to start buying dollars, and we could see a move back down to this sort of low down here, 91 the figure. So keep stops underneath the rising trend support. The Aussies, further out on dollar Swiss, what I'm looking for is an eventual move higher up to this 92.40, 92.49 was this high here, and then the 50% pivot is at 92.60. Eventually, once that goes, I'm looking for a move up to sort of 93, 90, and up to this 94.5 high here, which was September, 12 months ago. So that's eventually what I'm looking at. And it looks to me like we've got it sort of a rounding base forming. So as long as we hold this level here, as I said, about 90.60, then I think eventually we'll see new trend highs. The Aussie's looking a bit soggy. It's down on its lows at the moment, ahead of the GDP. Now, last quarter's GDP number was 1.1%. The general consensus is 0.4% for this month, although I have seen one report saying they think it's actually going to be minus 0.7. If that's the case, don't stand in the way of the downside, because the Aussie will be very quickly back at 92 cents and lower. If the GDP does surprise to the top side, then we're going to see a retest of the sort of 93 level, and this area up here, sort of 90. Where are we? 93, 20, 25. That'll see sellers, and then we've got the descending trend resistance down here. It's currently about 93.50, which is also where the base of the daily cloud is. So the resistance there is very strong, and I don't think we're going there. If we were to break up above it, then this double top here at 93.73 should cover it. But I think all the signs are the 4 hour charts are pointing lower. The dailies are not telling us a great deal at the moment, and neither the weeklies. But I do think the short term momentum definitely does appear to be to the downside. So I'm personally short, and I'm looking for a retest of 92.36 and eventually lower towards this sort of 92 cent area. The Kiwi equally that came under a bit of pressure. The US data didn't do it any good. That supported the dollar. Another weak milk auction also has hurt it, and I see the Aussies just it's heading back down towards 83 cents support now. This low overnight was 82.90, and if we go further out, we need to go out to the dailies. Really, we're coming into this support down here, the FIBO pivot 82.75 or thereabouts. That might provide some help for it on the day. But if the Aussie were to head low, the Kiwi's going to come under pressure again, and a break of that would take us down 82.30 down here. This low here, 82.30. If we were to break that, we're probably heading back down here towards sort of 80, this 82, 81.90 area. But the major support's down around here at the 61.8% of the whole move up, down around 81.45. Don't think we're going there for a while, but the trend is undoubtedly lower. We'll have a quick look at the dollar index here while I'm here as well. The dollar index, as I said the other day, I thought it was going to get ahead higher towards 83, which is pretty much where it is at the moment. It is stopped there for the time being. Now the indices. Sorry, the indicators are still pointing higher, but we're going to come into some major support here around major resistance here about 83.30, and I don't think we're likely to take that out for a while. This, as I pointed out on Monday, goes way back to 2007, this trend line. So I don't think we're going to take that out. I'd be taking some profit on long dollar positions, looking for a correction lower back towards 82, 82.5 perhaps, somewhere around there, and then I'd be looking to buy dollars again. The weekly charts are still looking very positive. I'm just going to have a quick look at the weeklies. I've just got to blow this up. So yeah, the weeklies still do look positive. As I say, we're coming into this this 83.30 area. But as long as we stay really above the rising trend support, which currently comes in about 82, 82.25, something like that, I think that's a fair way away. The indicators are still positive. They are becoming overbought, so hence my reason for thinking that we should be taking a little bit of profit, at least first attempt up here, wait for a correction and then buy it again and look for it eventually to come up here to test this 84.75 area, which we last saw in about July last year, 2013. Okay, so that's about it for today. It's going to be another busy one. We've got all the global services and non-manufacturing PMIs led off by China, which will have some effect on the Aussie, perhaps if they come in too far away from expectations. Later on, we've got the EU and then the US numbers as well. Glenn Stevens is going to be speaking at lunchtime, about an hour after the GDP release, so watch out for that. Then later on, we've got the EU retail sales and the US factory orders. So it's going to be a pretty hectic session, but the market is looking out towards the ECB tomorrow, and then of course the non-farm payrolls on Friday. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.